Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 23rd of September 2021. And we're producing our gold and silver morning update and price forecast. Gold and silver prices rose quite sharply after the Fed's FOMC rather dovish announcement yesterday, but has since fallen back, but is staging a small or slight recovery. Traders do not really know what to make of the news, but one thing is for certain. The US dollar is still holding strong, and that will be bad news for both gold and silver prices. So let's take a look. Welcome to Illuminati Silver. It's Thursday, 23rd of September 2021 at 10:43 a.m. GMT +1. Weather outside this morning is dull and murky. Yes, dull and murky. The clouds have formed a rather grey mist above us, and there are sprinkles of drops of precipitation. Sprinkles of drops of precipitation. And there's a lot of precipitation in the news this morning. Evergrande debt crisis is financial stress test no one wanted. UK is warned of stagflation. We keep hearing about inflation, but is warned of stagflation risk as economy cools and prices rise. And perhaps the most important of all for today, stocks gain on Fed taper guidance. Treasuries dip. What does that tell us about what happened yesterday? We shall take a look. So, Evergrande, what's happening here? Very briefly, China's real estate powder keg threatened President Xi's drive for stability and may yet force a too-big-to-fail moment with global implications. China Evergrande Group, until recently the world's largest property developer, owns dozens of stalled sites like Sunny Peninsula across China. Buckling under more than $300 billion in liabilities, the company is close to collapse, leaving 1.5 million buyers waiting for finished homes. The global financial markets are bracing for potential aftershocks. Evergrande is China's largest issuer of high-yield dollar-denominated bonds, some might call junk bonds, and bills are coming due to an array of banks and suppliers. Given its footprint in the housing market, there's also a risk of a disorderly collapse, triggering a broader decline in property prices. Bad news in an economy where 27% of loans are for real estate. Now, this is a video all in itself. But clearly the signs are not good, but the hopes and desires are that the central government in China will bail them out. Talking of bailouts, UK is warned of stagflation risk as economy cools. The UK private sector had its weakest month since the height of the winter lockdown, and inflation pressures escalating, adding to evidence that the recovery is running into significant headwinds. IHS Markit said the further loss of momentum in September was most pronounced in the manufacturing sector, where demand softened and shortages of staff and materials acted as a brake on output. Factories and services firms raised prices aggressively in an attempt to pass on the soaring cost of wages, products and transportation. The September PMI data will add to worries that the UK economy is heading towards a bout of stagflation, with growth continue to trend lower while prices surge ever higher. So this arguably is even worse than inflation to a degree, said IHS Markit's chief business economist Chris Williamson. The figures sharpen the dilemma facing the Bank of England over when to start removing the monetary stimulus deployed to fight the coronavirus crisis. The central bank announces its latest policy decision at noon, which is just over an hour and a quarter away and will come out after we have published this video. But the most important for this moment is this. Stocks gained along with US futures on Thursday after the Federal Reserve signalled it could start scaling back asset purchases this year, but left the door open to extend stimulus if the economy needs it. Treasury yields rose and the dollar declined. Now, those who listen to our videos this week, we have said the Fed has a very difficult balancing act to perform. On the one hand, they have to satisfy people that money is not going to continuously be pumped into the economy. Otherwise, we all know that would ultimately lead to hyperinflation, while at the same time not put at risk all the gains in the equity markets and other asset bubbles which currently exist in jeopardy. So how do they do this? By promising tough action but delaying it further. Contracts on the S&P 500 and Nasdaq 100 rose, while the Treasury yield curve flattened modestly. Federal Reserve Chair Jerome Powell said the US Central Bank could begin scaling back asset purchases in November. And if we recall, a lot of people were calling for September/October. We have said it's more likely to come towards the end of the year and possibly in January. But our money really was on November or December. Let's wait and see if that occurs. The Fed has got to be pleased that their communication on the longer way to tapering has avoided the dreaded fear of the tantrum. Jeffrey Rosenberg, Senior Portfolio Manager for Systematic Fixed Income at BlackRock Inc., said on Bloomberg Television, "This is a very good outcome for the Fed in terms of signalling their intent to give the market information well ahead of the tapering decision." Let's have a quick look at business news and then we'll see how markets have been affected. Energy firms collapse, hits 1.5 million customers. Evergrande shares jump as debt deadline looms. Food firms warn of panic buying this Christmas. And Taiwan fears China will shut it out of the trade pact. In America, US approves COVID booster jabs for some Americans. France and US seek to amend rift over AUKUS pact, which we mentioned last week. And Trump sues his niece and New York Times over their tax story. Let's have a look on the financials. Dollar down slightly because of yesterday's Fed's slightly dovish approach. 93.16, still holding above 93, and we maintain it will continue to do so unless, of course, the Bank of England announces something quite severe today, which we doubt. Oil markets down just slightly, with WTI crude at 72.06 and Brent crude 76.09. Equity markets up across the board in the US yesterday, averaging 1% gains. Asia Pacific overnight mixed bag. Hang Seng doing well, up 1.2, but the Nikkei and Topix down between 0.5% and 1%. But on opening this morning and continuing throughout the morning, we have a positive UK and European market sentiment, broadly rising somewhere between 0.5% and 1.27%. Economic news announcements. Well, apart from the FOMC statement, which was the key, we saw existing home sales for August actually marginally beating expectations, coming in at 5.88 million against expectations of 5.87 million. But today, quite important, because we actually have the market manufacturing and the services flash PMIs. Now, they're not the same as the final, but they give you a good indication as to where we are at. And of course, the initial jobless claims. All of this will have been outweighed by what the Fed said yesterday, but nevertheless still worth noting. So, how is gold and silver performing over the last 24 hours? Well, we can see that over the last 24 hours, gold is actually down $4.48. But look at this rise. It did rise earlier to $1,786 and then fell all the way back again. Now, this was yesterday around just after, I think, looking at the time, yes, after the announcement yesterday, Rose had a big flip. But then perhaps the market realised it was not quite as generous as many thought it would be. And so, of course, we saw prices come back down. But they're staging a bit of a recovery this morning. So we've got gold at $1,770. Will it reach $1,800? Might be a bit of a stretch. Might be. Silver, however, silver is actually up 5 cents over the last 24 hours. But like gold, rose dramatically yesterday, actually breaching $23, going as high as $23.16. But then again falling all the way back. In fact, touching, I think, the week's low. Yes, the week's low of $22.52. And that's earlier today. Recovered again slightly. And so we have silver standing at $22.81. So it's made an attempt to hit that $23 level. Couldn't stay there for long. Fell right back. We'll be doing a video later today on what the Fed did and how we see that affecting prices. What we will say, however, is that whilst it's good enough news to keep the equity markets more or less in check, it's not wonderful news to give gold and silver that tremendous tailwind boost they were hoping for, though it did do so temporarily. Equally, though, it's not creating huge headwinds to push the prices significantly lower. But now, of course, the focus will be on the jobs reports, various jobs reports coming out, and whether the Fed will actually go ahead, because this is where the attention will now be directed. Will the Fed go ahead for its tapering in November? We've had a stay of execution. You can bet what's likely to happen before that day is reached. Cryptocurrencies up this morning, over 5% of the last 24 hours, and the market cap has risen again now to $1.97 trillion. That's it for now. Please give us a thumbs up, subscribe, press the bell sign. If you don't like what we say, then give us a thumbs down, unfortunately. But we have to ask for both. And look out for the video that we'll produce later this evening around 6 p.m. GMT +1, specifically on what the Fed did say, and perhaps more importantly, on what it did not say. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.